Good morning, guys. Hope you're doing well. We've got this new look and feel of the bubbles. We've got a dark background. It's designed so it saves my eyes. I use the bubbles a lot, and the Aussie bubbles really profitable yesterday, and it netted me lots of profit. And so much is what they did. They shorted the Aussie, and it really pumped in price. And so I caught some of that move, which is really nice. It was really good. So the bubbles are really powerful. So if a bubble comes over this way, if it goes left, it tells us that they're shorting. If a bubble comes right, it tells us they're buying. So therefore, we want to try and do the opposite of the herd because they're counter trend. So up here is no strong sell. Down here is strong buy. The reason for it is that they're short already, and they're going to add short. They're long, and they've added long. So it makes it a stronger bias for a sell. Now we've got this bubble delta flow. So the daily bubbles and the average bubbles and the weekly bubbles are just simply snapshots where we are now compared to where we were a week ago. The bubble delta flow gives us a much more intimate, in-depth look, closer time scales. So we're talking 4 hours ago, 1 hour ago, and 30 minutes. And we're about to see confirmation over time in those small time frames, which should be really powerful. So I'll give you a demo. Let's use the dollar. So when you come to your computer in the morning, you'll see this, and you'll see that they've actually shorted the dollar by, say 5%. Hopefully my computer isn't going to go slow. Right, so you can see that they shorted it, therefore making it a buy as per logic. The key is continuation. We want to see them hold on to the bias. We want to see them add. Okay, if they add, that's great because they'll add to that bias. So we come to the dollar over the last hour, and we can see that they've added a little bit more. So we can see a little bit of confirmation. And over the last 30 minutes, they've added even more, which is very typical of the herd. So what you can see, we can see a time difference, and we can see them add to that bias. We can use the example of the CAD because it's up there, and we can see over the last CAD, perhaps they've gone slightly long. Let's plus that, just 2. Yeah, so they've gone slightly long, and then the last hour, they've actually gone really long there. And so the last 30 minutes is they've actually gone very long, the CAD, and they're short of the dollar. Now, the base case scenario, the trade setup is that you buy strong buy, then you sell strong sell. Therefore, dollar CAD would be a buy based on this setup, and we can see how we've got confirmation over time. There is a little bit of an issue where we may have like a graphical issue of an overlap, and I'll show you what I mean. We come to gold, say, and say that they've shorted gold. We're going to get like a slight overlap, but we can see that while we've got the overlap, we can see that it's differentiated where it says XAU USD. It may just be a case where we're going to get a lot of bubbles like colliding with each other, because if we see that collision, we'd want to be careful and probably avoid that particular currency pair, where if we have that situation, you might not want to trade gold because there's a big battle going on. We had a battle in the pound USD yesterday. So it should be a good example. Should be very, very powerful. And because it's a much more in-depth look, very eagle-eye view, but also very low-level analysis of herd sentiment, and it gives us the positioning over time as well. So this may look a little bit different when we go live on Sunday. I may change some aspect to it. Ideally, I'd like the colors to change, but we can look at that. This is a very it's like concept. We're very early days because it's just an idea that I had last night. So it may look a little bit different. It may look a bit tidier. But if we do get an overlap, one, probably avoid that pair, and 2, you can tell which one it is by simply hovering your mouse over, and you can see what it says there anyway, XAU USD. If we have like another overlap, let's say there, we are going to get a little bit of a, oh well, it might not be too bad. It may not be too bad. And so therefore, if they do this with the CAD, New Zealand dollar, they shorted the New Zealand dollar, but they've gone along the CAD. So you'd want to buy Kiwi CAD, but you might want to avoid the New Zealand dollar USD because they've shorted both. You see? So then if you want to try and get something on the left-hand side versus something on the right-hand side. And that's it. So what I'll do now is reset all the changes. We're going to reset the bubbles and we're good to go live Sunday night, and hopefully it helps. I'll speak to you guys soon. There is just one thing we need to be aware of, because we've got a lot of noise coming out from the White House about the tariffs, especially about the Canadian dollar, also potentially the Aussie because of China. We're going to see a lot of volatility on the Canadian dollar, and also with that out the equation, if we didn't have Trump as president, we would still see volatility in that currency pair, where we can see the herd change their mind a lot, and they may take profit, they may get stopped out, and what should normally happen is that we hit the extremes and we can see reversal. We can hit the extreme and we can see the reversal. So for example, CAD, say, let's say they've gone long, right? So therefore, think, oh, okay, so, we'd want to sell that. What have they done in the last hour? They've actually really changed their minds. So they were long, but then they're very, very much less long now. And now, by that logic, going from there to here, we could end up over here, making it a buy. Right, so we've got to be careful. So we come here and say, here maybe. We're just in a big flip-flop on the Canadian dollar. So 4 hours ago, they were here, but they've really reduced their positions and they've really shorted it. And then, of course, by selling it, it's going to push this bubble down. And the bubble comes down, it's going to come to strong buy. So what you need to do, what I'll be doing is checking where the 30 minutes is in proximity to the 4 hours. And so the 30 minutes is probably the key. And for example, we can see there's that difference over time. Oh wow, there's been a big, huge difference. You can measure that. That's a massive distance of positioning. So as it stands, you'd probably want to be looking to buy the CAD, because we've seen this big reversal. They've gone long, and they go, oh, hang on a minute. They probably got stopped out, take a profit, but more likely stopped out. And now that action's pushed the bubble across, and it's making it a buy. And that's just the CAD. So we've got to remember to be careful. I was just saying in Discord, it might not be a bad idea just to have a little bit of dollar exposure to the long side, because if we get any volatility in FX, it might be a flight to safety in the dollar. So it might be an idea just to have a small position in the USD to offset any of that volatility. So we've got to remember, there are things that we've got to bear in mind, that they do change their mind. They're quite flippant, and they might just exit as per news event. They might say, well, I don't really want to be long CAD. This news is really scary. And that action is making it a buy, because they've reduced their exposure and they've actually started to sell it. If they sell the CAD, we're going to see a big pump. Okay, so we've got to remember to be careful. There's a little caveat there of the reversal as well. Ideally is what happens that they add, and then they add and they add, and then that's great, but they may change their mind, as we can see in this example. So trade safely. Hopefully it helps, and any questions let me know, and good luck for this week, and I'll speak to you soon.